Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. So today I'm joined with John Bartleman. How you doing today, John?
Doing great. Thanks for having me.
Awesome. Well, we brought John on because a lot of interesting stuff going on in the markets, and wanted to get his take on it. John, maybe you could tell us a bit about your background.
Yeah, sure. So I'm the CEO, president and CEO of TradeStation Group. We're an online broker dealer catering to the upper end of the market, highly active traders and institutions. I've been working with TradeStation for about 26 years. So I joined in '99 after 5 years working at Franklin Templeton. So I've been in the markets for a long time. I actually joined TradeStation back when they were a software company. It was called Omega Research in Miami. We were a publicly traded company at the time. We developed software to backtest your ideas before you put your money to risk. It was one of the earlier platforms for that and the first retail charting platform. So, being part of an evolution from that to within a year being here, we acquire a broker dealer, change our business model, uh, learn how to build out a broker dealer. So I was on the product management side, actually building out these capabilities. And then, being acquired by Monex Group in 2011, they took us out of the market, brought us private, becoming part of a global enterprise. It's been a great learning experience, building products for the Asian markets. And then now taking over, I took over CEO in 2016. So I've been doing this for the last several years. It's been an unbelievable experience, being at a company this long and being through the generations and now taking it sort of the next level.
Nice, nice. Yeah, I mean, I've always been fascinated with TradeStation. When I first started trading, that was when I was in college. Started using TD Ameritrade, sorry, it was Ameritrade back
American, right?
then. And that was the first one I used. Actually, the first one I used was Schwab, and then I realized like they're charging me 35 bucks. I'm like, yeah, let me try Ameritrade. It's only 10 bucks. And I started like messing around. And I have a bunch of friends that became traders. So I started working with them, and then they became, full-time traders with their own money. And most of them use TradeStation. I always wonder, like, what is it about TradeStation? I don't want to turn this into a sales pitch. I know I'm
Yeah,
setting you up that way, but I don't want this to be a sales pitch. But like, there's so many different choices out there now, and maybe everything's just commoditized. But like, what was different about TradeStation from these other platforms? Because some other platforms had good technology too.
absolutely. No, I think it really was the fact that we were the first main platform that worked on allowing you to backtest with, English-like statements. So it's really a Pascal-based language, but it was fairly simple for a non-programmer to learn how to backtest their trading. And this was a day, you have to connect your market data and plug it all in, manage all this. It was a nightmare, but at the time it was state of the art. Now, like you said, you've got fintechs galore everywhere, popping up with amazing ideas. But back then there weren't a lot of choices. So if you wanted to be professional, and really treat this as a business, you had to perfect and optimize your strategies. And we allowed you to not just test them, but automate them. So for a lot of, professional traders and hedge funds that were starting out, it was a great platform to get started. And then you graduate off generally and, build your own models and get more professional.
That makes sense. It's funny because I've asked people this in the past and nobody nobody could explain it properly, but that actually makes a lot of sense because that was one of the challenges that I've come up with over the years is I've got this idea, I want to backtest it. How
Yeah.
do I do it? And automating it's a totally different level. I'm not sure I can feel comfortable with that because, I like my money and I want some computer running wild and making mistakes. And I'm sure it's fine, but that to me, that's a risk I'm not willing to take. But the backtesting, I think, is important. Does that only work for equities? Does it work for options and futures or?
For us, directly, it's basically specialized for futures, equities, FX. We used to have an FX business. We'd since got out of that, but that's really was designed for. We never really worked well with options, but I can say now, like I said, there's dozens and dozens of really amazing fintech platforms out there that specialize in options backtesting, and they do it not, basically no code. I mean, it's really pretty incredible ways to backtest your software. A lot of these types of platforms are plugged into TradeStation, so you can use us as a broker, but you're using those platforms for your analytics, and that's sort of the way I see the world shifting. Is that there's so many players and the barriers to entry are pretty small. So for TradeStation to continue to compete in that space, it doesn't make sense. I can't keep up with them. So we focus on being the better broker. And now we should talk about AI because that's actually, I think, taking the next step in the evolution of where traders are using technology to assist themselves. I've been diving into this in the last year. It's been incredible. I don't go a day now without using AI as my trading assistant.
Yeah, I'm going to get into AI in a minute because that's a big topic. But I do have a question though, because I know there's been a trend in the last eh, 5, 10, maybe 10 years where pretty much all the brokers went to zero cost trades.
Yes.
What's going on with that? Like, what is the advantage? Why would they do that? And how does that business model even work, doing free trades?
So it works on the equities and options side trading because brokers are mostly submitting their trades through market makers. In return for the order flow, you're getting a payment for order flow. So it's just an economic model that allows brokers to still earn revenue off of the trades, and you're getting very tight spreads. So I think there's a big debate within the industry as whether this is good for retail customers or not. My opinion is I think it's outstanding because it's allowed us to get to zero commissions, and you're getting tighter and tighter spreads. So to me, this is a win-win for both the industry and the customers. And we had a few companies early on, Zecco and some others, that tried this business model and it never really took off until Robinhood got into the space. And we saw it. We'd had actually trialed for veterans and first responders and active military. We'd offered commission free before it was a thing to do, and we saw that those customers that didn't have that friction of commission did trade more. They were more profitable customers for us, and it was better for them. So once Robinhood lit that on, and then it was 2019, I guess, and then Schwab jumped in, then all of us had to go in and adjust our models. So I think it's been great. Now
So
it doesn't quite apply in the futures world. There, you're still getting a commission because it doesn't have the same market structure.
so you mentioned there's a debate whether it's good for retail. In which way? Why wouldn't it be good for
Well,
retail
because
getting free
there's
trades?
somewhat people consider this a hidden fee, and they don't
Uh,
understand the mechanics behind there. And are they getting the best fill possible? As a market maker taking some of that inside. But what we were able to show and what brokers are required to disclose is how they're routing orders and their execution quality. I mean, the execution quality rules for us are pretty strict. Um, so I think retail customers are getting, I think, the best of both worlds here.
but the hidden fee was already there.
It was always there, but they didn't always know that. And now when it goes commission free, everyone asks the question, well, how are you making money? Where am I getting taken advantage of?
I mean, Robinhood, there was a whole thing about that, right? Because they were getting paid for order flow information by the hedge funds, and people are like, what are you doing? Like,
Exactly. But I think people have adapted and learned that this is actually a good thing. And when you see the spreads tightening the way we are, you're getting good fills, and we can prove it. I think it's still a good thing. I think the administration now is more less regulatory oversight, and I think this is no
yeah.
longer an issue.
Well, it's interesting because when you're trading big companies like an Apple or an IBM or a ExxonMobil, like the spreads are really tight. It's the penny stocks you got to worry about, which you do anyway.
Exactly, and those you should always be careful, and that's the challenge.
Um, but it brings up an interesting question because maybe it's the last 15 years, maybe 20, when a lot of the trade orders from institute. So back in the day, in the 90s, the mutual funds used to put their order flow through the markets in a normal
Mhm.
way. And then they started hiding it and they started putting it in these dark pools and they start obfuscating what they're doing for obvious reasons. If you're sending in $1 million trade, you can't just throw that in the market. So how has that market changed? And also, like, how does that impact retail investors? Because all the institutions are doing their thing and they're putting it through their systems, thinking at the retail or trading with each other. How does that actually work? And is that actually a good or bad thing for the markets?
Well, yeah, I mean, these more darker pools have been on and off more of an issue for retail customers. Maybe just they don't understand it. But to your point, I mean, large institutions have to move large block trades, and that type of environment is critical for them. And it's not disrupting sort of the natural market that the retail and some institutional clients are still participating in. So I don't see that as a negative. It's become less and less, I think, of a topic over the last several years. And today with the market structure we have with the number of market makers and we have a lot of institutional flow, for example, coming through our business, coming through players, Schwab, Fidelity, Interactive Brokers. We all cater to that type of market. So they're all coming through the same pipes that the retail customers are coming through.
Okay. What do you see as excluding AI, which like I said, we'll get to, but excluding that, like what are some of the trends or evolutions that are happening in your space right now? Because I know with the zero cost trading, that was a big one. With
Yep.
Schwab and TD merging, that was a big one. Which I'm not a fan of that. It was
Well, I think
just
there's a few things that are happening now. The biggest shift has been the shift to derivatives, so equity options to start with. You had players, Thinkorswim with Tom Sosnoff built that platform that
yeah.
got sold through Tasty, and then we launched Tasty Trade after that to kind of repeat the process. That introduced, options traders to a great platform to be able to learn to trade. And then when Robinhood entered this space, this really exploded. You now have this entire new generation of traders who come in during COVID and started day trading for either for a living or for fun, getting exposed to the equity options space. And they're doing that with zero commissions again, remove the friction, and their platform's so easy to use. That's been explosive growth. Now you saw Robinhood getting into the futures market. So like TradeStation, we've always been in this derivative space. That's been sort of a differentiator for us. But it's good to see that there's more of the population now getting exposed to these products because it just creates more business and opportunity for all of us. To help educate customers on how they should be taking advantage of these products in their trading. So that's been great. And we see now the move from futures into futures options. So it's an area that we've supported, but not as well as we'd like to. So it's a focus of trade stations. And I think this is in what we're seeing with the CME is this is one of their fastest growing products. So I think this shift to derivatives is one phase. The other is the shift to 24-hour markets. We've seen with the advent of crypto, everyone got used to now trading crypto, 7 days a week, any time of day. They expect the same from trading stocks or trading options. So you've seen all the exchanges now announce, we're going to get in, start building the infrastructure for us to support that. There's been some dark pools that have allowed overnight trading that some of the brokers have connected to. We chose not to go that route right now just because of the way we're structured, but we are prepared now to go 24 by 5 as the exchanges go. We're expecting next year. We think this is a good thing. I mean, one, our parent company in Japan, we have a lot of Japanese retail clients trading US markets. So they obviously demand having the overnight hours for the convenience. We also have a large international presence beyond there. So a lot of European customers, Middle Eastern customers that would benefit from access 24/7. And then I think, like I said, the US market is just the standard. People are just used to this kind of zero friction. Whenever I want to trade, I want to trade. And it's kind of what happened with Amazon and shopping. Robinhood sort of started this thing with retail trading.
So do you think getting Robinhood investors into futures is a good idea, given all the problems that have happened over there?
I think it is to educate people. I mean, so what we're talking about here are the ones that are sort of the graduates of just trading. I want to get better. I want to get more sophisticated in what I'm trading. Futures options, and particularly futures spreads, can be a great vehicle to get exposure to these products in a way that's maybe better structured than some of the ETFs you can get exposure to on the purely equity side. But again, this is for more sophisticated traders who want to take advantage of this and learn how to trade these strategies and what these strategies are.
But Robinhood doesn't typically have sophisticated traders on
Not
it.
typically, but they are advanced. I mean, they're developing more advanced tools, and their customers graduate. I mean, they move on to platforms like TradeStation or Interactive
Right.
Brokers or TD Ameritrade's better platforms for active, sophisticated traders. So I think it's just an ecosystem that's been created that's like I said, really supporting this generation of traders. And now
Yeah.
you're seeing the other trend we're talking about is the move to these event contracts. This explosion now started with well, it didn't really start. It started earlier, but with the election last year, really caught fire because you had Robinhood and I think IB at the time had launched event contracts on the election, and those were huge visibility. I don't see these as super successful yet for real professional traders. Our customers are not demanding it, but it is interesting. To me, it's more of a gambling aspect. CME is they've launched event contracts and tried to push that. We've talked with Kalshi and all these other players over the last several years to see if we wanted to get involved in this. I think as it matures, maybe it becomes an asset class that we would want to support. But today it's more retail, more mass retail and gambling. But it's a big push. And then you have zero DTE options as well. I almost equate it somewhat the same way. I mean, it's a little bit short term, a little more binary gambling, but our traders are like this is the fastest growing area in options trading is zero DTE, and I think there are some benefits there if you know what you're doing.
So it's interesting because Kalshi I always found to be fascinating. I've never done it, but like I've looked at the spreads. I'm like, I want to bet on this. I've just
Yeah,
never done it because it's just, I don't know. But sometimes you look at things, you're like, this is kind of a no-brainer. And the financial markets, you can basically bet and gamble on stocks, which is basically a gamble if you're doing it short term.
yeah,
Or you could do it on events. Like, why not? And I think it's a natural outgrowth. Like you should be able to do that because these hedge funds are doing it anyway.
yeah,
It's just a
absolutely.
second degree of separation. You're like, all right, if this happens, then this happens. Well, why don't you just bet on this thing, the first thing? It's
Right.
easier. And then you're going to have a lot more. So I find that to be interesting. Um, one, one question I do have, and I've always been curious. So with options, they explored with the minis, with things like the S&P 500, because you really, you really can't do it right unless you have a significant amount of money. But you've got these companies that have $1,000 stock prices, which clearly doing options on that is not going to be easy for a retail investor.
Yeah.
Um, they started the minis years ago and then they squashed it. Like, why did they squash it? And do you think that'll ever come back?
It might. I mean, it all comes to market participation and whether you're getting the volumes there to make it work, and they just didn't at the time. So whether that comes back, we'll see. Like on the future side, we're seeing the micros and minis really take off now in the retail space. So there, but it took a while to kind of get the attraction and get that moving. So with equity options, we may get back there. I think the other side is on the future side, looking at single stock futures. It's another thing that we made one pass at it. We didn't really get the attraction, but the exchanges are going to take another try at this, and I think there's going to be more adoption because now you've got more of an appetite for at least trading the big names. You want to trade those 24/5 and have better leverage capabilities in trading futures, and I think this is going to be one of the products that brings more retail people into that space.
But I've never understood the single stock futures. Like, what's the point?
Well, the point is really 24/5 trading that you have there. Now you're going to get it on the equity side with the
Right.
exchanges there, but you have better leverage and a little better tax treatment when you're trading on the future side than you do equities.
Okay.
Um,
All right. So it's really about that. It's not about anything
yeah,
else.
I mean, people look to maximize their margin, period, for the most part when you're trading. So.
Yeah. Interesting. Okay. Well, that's cool. So tell me about AI. I know this is a big trend. I've gotten the impression I haven't gotten a lot of firsthand knowledge, but from what I've been hearing on the outskirts, AI is a great trend, but it's not quite where you need it to be, where you just plug it in and just let it go. So tell me, what are you seeing in AI? How are people using it? What level of
So
sophistication is it?
yeah, so there's two. I see, like for us particularly, there's two sides to this. One, within our company, for example, using AI to be more efficient as employees and automating processes across your organization. I think every company's doing this to some degree, and that will mature and get there. That will transform us all, and we're going to have to figure out the impacts of that. But I agree with you; we're not there yet. I mean, it's just to get to even measuring. For example, a software developer. Let's say I think we're writing about 30% of our lines of code with AI. But does that mean I have 30% more engineers? Not exactly. It's the engineers actually have a lot more value add that they provide to the organization when you start breaking down their actual tasks. So just to get to how do I measure a full-time equivalency of an employee? How many people do I have with AI? It's like we're in the early stages, but I can see that's moving and we'll get there and the technologies are expanding. But now on the trading side, it wasn't until I would say about 6 months ago, I've been using it myself. Anything I write now, I'm using AI to help me and, kind of analyzing the markets. Um, but at TradeStation, we connect, I don't know if you know about MCP servers, Model
Yep.
Context Protocol, that allows you basically, well, I'm using Claude for it, but basically it allows you to have a connector. So I can connect myself to my TradeStation account. We have an internal MCP connector we have not launched yet, but I'm internally beta testing this and it is incredible because now effectively it's our API. So it allows AI to talk to my TradeStation account to know my positions, my balances, my open orders, pulls market data, and it can actually place trades for me if I tell it to. And it is incredible. So I'm now using Claude daily. So I've worked with it to build, and I go back and forth between ChatGPT and Claude and Gemini, and I work them off each other to build more sophisticated prompts. Um, and I can say that it's getting there. As a trading assistant, it can do a lot more than I can do and think about. in a short period of time that I have during the day. So I'll start the day, run the prompt. It's doing an entire macro analysis. I've got it pulling market data from all over the place. It then layers down to my portfolio, giving me advice on what I should be doing in my portfolio. And then looking at other market opportunities, whether they're macro trades, and I've got other specific areas. I'm doing a lot more on the options and futures options side right now, trading some of the macro trades off this. Um, and what I've found that it can do the analysis better than I can. It's just you've got to go in and test it. So one in your prompt, building in QA testing into it, so it's kind of rethinking itself, because otherwise you've got to do the asking it to, hey, are you sure you got the real time data? Are you sure that you got this right? But once you've done that a few times, it's incredible. And then I can say, okay, go place the trades for me, and it'll actually go place the trades that I would say works about 80% of the time that can actually connect. There's hiccups in this not working perfectly all the time. But again, this is getting better daily. So I don't even have to go click in my trading software. I just tell it what to do, goes. I can see it happening in the platform. I'm getting my alerts that my trades are being filled. It's awesome, frictionless, and it's helping me manage. Talking back about equity options and futures options or futures spreads. It's helping me build and structure the trades better than I could do myself. To understand what the best options, because they can evaluate all the options chains, all the Greeks, and work out the best spread for you. And then on a daily basis or intraday, you're getting it to interact with your positions in the market to say, do I need to adjust? Do I need to roll anything? So, for a trader that's getting into this space, it's like having training wheels. And as you have conversation with it, you can ask it like, why are you doing this? Why are you doing this? You're learning yourself along the way what's happening. Now, it doesn't have the sophisticated backtesting capabilities that we have and others have. It does do some rudimentary backtesting. It'll do. It'll tell you, hey, I backtested the idea, and it's like, but what did you really do that on? It's
It's
light, but
not
it's
good it's not good at math, which is kind of weird.
not
But
good at math. But I'm saying it's to me, I would not trade without this now. So, and I think this is just going to get better. And now I'm wanting connectors to everyone else. So I've got a few data platforms out there that launched some MCP connectors, but I want my bank to have it. I want my doctor to have one. I want my other brokerage companies to have them. I want it to have full access to what I have, so it's more context. But to me, this has been great. Whether you're building a portfolio, long-term trading, or like I'm doing a little bit more swing trading right now, it's awesome. And it's customized to you as your individual, the type of style you want to trade. You can adapt it to what you need with a lot of babysitting.
yeah, I would think for idea generation, it would probably be great. I would maybe be a little uncomfortable letting it do the trades. There was somebody had a somebody wrote something about a month ago that I read, and I thought it was brilliant. And it was like basically there's three parts to an equation. It's like email. It's like you can have it do the thing, you could have it do email, and you can have it do like one other piece, but you can't combine all three because somebody could literally just email you and say, "Give me access to all your stuff." And then it does because the person says they're you,
Yes,
right? And
yes,
so there's all these things you have to think about. And like, so while AI is great, it's kind of like, all right, well, this is also a huge security gap. Like, how do we prevent it
absolutely.
from, futures leveraging up your futures trading to some losing position? Now you're like, you owe like $1 million. Like, what happened?
Right. Well, that's the thing. And right now, the way this, I mean, and there are with this whole MCP methodology, it's obviously a huge vector for cyber attacks. So
Hmm.
that's why we have not launched our product. Otherwise, I would have done it a month ago. Our team's like, no, we got to really get this secure, which, we're going through the process. But at the same time, like I said, I'm doing this. I had the same hesitations until it started placing trades for me. And you have to manually say, yes, do this and have access. So it's a little bit more difficult for it to just go wild on you. There are controls there, but once you start getting comfortable with it, and then you don't necessarily need the strict instructions. Like you can say, hey, here's all my trade recommendation. I say, yes, go ahead and just do that one and do this one without exactly explicitly saying like you would to a trader on a phone call, for example. Fill this at this price. It doesn't need it. And so far, and knock on wood, it hasn't made mistakes for me. In fact,
Yeah.
I've made mistakes trading directly in my own platform, and it's caught the mistakes and helped me correct them. It's like, oh,
Nice.
you're in the position backwards. I'm like, oh, Jesus, because I'm in a meeting. I'm not paying attention, with what I'm doing. And it's another set of eyes. So I think there's
It,
more benefit than harm right now, but definitely something, we all have to watch.
yeah, I've heard that. That's actually somebody's explained to me some like context of how to structure things because you don't have one AI agent do everything. You have
Right.
like you have multiple agents, you have all these agents doing mini tasks, and then you have one agent overseeing them all, right? And so
Yes, that's the
you've layered.
ideal.
Yeah, so it's kind of cool. Like if you really get into the construct of it, sounds like you guys are doing good work with it. What where do you see it going in the future, right? Because there's certain limits, but um, it, well, let me ask a question first before ask that. Are you seeing, because one of the things as I've seen in the AI market is there are not a lot of experts that usually you get YouTubers out there saying, "Oh, here we're doing this," and they show you all the cool stuff they're doing. I'm not seeing that. I might see one or two, but I'm not sure if they're not coming up with stuff or if they're not publicly disclosing it, right? Because hedge funds are notorious for their secrecy.
Yeah.
So it makes me wonder, are they developing cool stuff and not sharing, or is it just not being developed?
Well, I've just recently come across a couple of companies that are small startups. One was a hedge fund that actually built, I believe they built their hedge fund with the AI that they built. They apparently like it enough where they're trying to expose that out as a LLM for B2B to companies like us to be able to provide to our clients to leverage. We just started looking at it and testing it, so I can't tell you if it's good or not, but they're there, and there's, I'm starting to see more and more of these that are coming out. But I think it's just we're at the very early days. But what I see long term, I'm concerned for all these fintechs that are building, cool, flashy analytics only platforms. I don't know that that business model survives once you have AI that can replicate that for free
Right.
or nearly. So, and then you get into the wealth management side or even the asset management side. How much of that business gets taken over with AI? I think a lot. Um, we worry about this as a business model, obviously, because on the broker side, I don't see it taking over necessarily the brokerage because capital and regulatory intensive, and there's all this overhead for that. But the thought leadership of how to build these models, I think AI is going to assist for the medium term. But long term, I think firms are going to be able to get away with a lot less money managers and like having AI there.
Well, I can give you my thoughts on this real quick because I put a ton of thought and conversations into this. I think the reality with the advisors is most advisors don't know how to manage money to begin with. I would say 80-90% of them are just doing what somebody else told them to do, right?
Yep.
And there are definitely some who know what they're doing, and there are definitely some who are, average. And there's a lot of bad ones. But the way I kind of have seen it is if you look at robo advisors, which is really just a nice shiny name for something that was already going on. Um, but that took a certain percentage of the market. That's the market, and like Robinhood and robo advisors, that's the market that is not our market,
Yep.
right? It will never be our market. And there's a segment of the market, especially boomers, Xers. There's not many more matures around, but basically boomers and Xers, they're still going to want to work with a person.
Yep.
And that's not going to change. There's some extras that maybe will, but like half of the extra market, let's say, is tech friendly. And like I'm an exer, I still want to work with a person. I want to work with an
Of course.
attorney, not
Me too.
not like some sort of, auto contract thing. So I think there's that personalized element, but the millennials and on down, they want to work with technology. They don't want to work with a person. So I think maybe it's generational where it's just slowly evolves where the younger generation will do this and the old generation, no, I want to talk to a person.
Correct. And now,
So
well, that's the things you start. I just read an article on the latest Microsoft AI models on speech. I don't know if you've heard these yet. They broke away from ChatGPT's speech modeling and building their own.
yeah,
It's incredible. I mean, you're talking to a human being effectively, and it's the context. Like anyone reading, audiobooks or doing that, I think that's out of business because it's just going to do it for free. It's incredible. I agree. I mean, I think, but my point, I guess, is more, yes, you're going to have human advisors. You're just going to have less of them, and all of them will be assisted with AI. You'll be able to have
yes.
your clients talking to your chat bot most of the time, and they only need you when they really need you, and you're the supervision over the account in the person's life. So
I agree with that. I think the service industries have limited lifespans when I think what has to happen is the people have to evolve, and most advisors are not going to evolve because they don't know
yeah,
how. And
exactly.
many like us, we do evolve, and we just try to stay on the cutting edge, so we're on in the loop. But yeah, it's fascinating to see where things are going to go, but it's hard not to look at the future and be a little bit negative about it because it's going to change everything so significantly. I
Yep,
mean, if you think
absolutely.
about the markets, right? The markets are efficient, air quotes for you audio viewers, either quote unquote efficient, but once AI starts doing all the trading, it squeezes all the profits out. Then where are the profits?
Yep.
Like it's just an open question. I don't know what the answer is, but it's curious.
Yeah, no, I agree. And, I think long term too. I mean, talking macro, kind of picture, we have the demographic decline we're seeing around the world. And then, on top of that, you're going to have job losses at this scale based on AI. I don't, not a good future. So I think we're all as humanity going to have to figure out how to adapt to this.
Yeah. So you guys are obviously adding it to your platform and using it. Where do you see things like quantum computing coming in? I know that's further out, but how
Yeah.
does that impact? Are you guys thinking about it, or how does that look?
Well, I mean, in following some of the experts that I follow, I mean, it's still a big debate whether that's, coming in 2 years or 20 years still. But I think that is going to be a whole step change in capabilities that's going to make this all a reality. Um, but the timing wise, I'm not sure. I mean, it's just so variable. It's hard to tell, do you worry about that right now? Not really. We're focused more on how do we take advantage of AI now? How do we get the efficiencies? And like you said, like it's not there yet. I mean, we're just building out. I mean, we talked about MCP connectors, basically having that kind of technology across every organization to organize data. I mean, we've got years to kind of expose this up and get clean and ready. Um, but you get to quantum on top of this, it's a whole nother perspective. And then obviously the downsides of that with cybersecurity and cryptography. And do we have major issues with blockchain? Do we have major issues? All this everything that's happening with crypto. Does that stay ahead of the curve? Nobody knows.
Yeah, I kind of look at it like AGI. It's one of those things people are afraid of, but to actually get there, it's probably a lot further out than people think. I mean,
Yeah,
think of quantum computing. They don't even know why it works. Like
right,
they know it works, they don't know why. It's like, okay, that's a problem. That's like saying, hey, we got AGI. I mean, people don't know how AI works.
right,
How does it work? I don't know. Oh, that's
exactly.
scary.
Well, we didn't know how the internet worked either, and now you got, none of us could exist without it.
Well, we do know how it works.
Well, I know, but
But
back then, I'm
AI,
saying a
the
lot of
people who
people didn't.
develop it don't know how it works. They're like, we don't know, it just happens. Like,
Yeah,
really?
yeah,
Somebody doesn't know? That's weird. But
yeah.
anyway, all right, so I also want to talk about like what are some of the big trends, like macro trends going on today? Because I mean, there's a ton of them, but outside of AI, quantum computing, robotics, like what are really the macro trends that people should be thinking about right now, um, with their investing?
Uh, Well, I mean, the stuff that I'm personally most focused on in looking at is, sort of the big picture of what's going on. Like I said, with demographics, that's a big trend that's going against us, and humanity's never experienced this. When you had a declining demographic population, at the same time you have a global capitalist system that has been all on fiat and now in debt to levels we've never seen. So, I just recently finished Ray Dalio's book, How Countries Go Broke. I mean, that was eye-opening too. I mean, it's just, layers on top of the worries you already have. Like how long is this sustainable? Um, it's kind of hard to tell. And, we'd had a conference last year. We brought together a bunch of thought leaders on this. Peter Zeihan, End of the World is just the beginning. It's more on demographics, and Neil Howe, Fourth Turning is here. Um, we fought. I'm a member of Vistage, and in Vistage we were exposed to ITR, the economics firm, and Alan Bolio and his brother Brian. They've had an economic model that's been calling for a depression actually around 2030. They've been calling this, I think, for like 10, 15 years with their models. So you kind of have all this negativity happening on the one side, and what's gonna happen. Then you have AI, quantum, as we're talking about robotics, the health tech. So we're all going to be living longer. I mean, it's incredible what's happening on the other side. So how do these intersect? How do you prepare and invest for these things? Both as a company and individually. It's a fun time to be here, but nerve-wracking. So I'm bullish on gold, silver. I mean, obviously those are hitting all-time highs. Bitcoin I've been involved in a long time. I mean, TradeStation are one of the early players on the retail broker space in crypto. So I'm very bullish on Bitcoin. it's just interesting times right now, and I just feel we're about to hit September volatility period. We all see, are we going to have a short term correction right here? Probably. The U.S. equity markets probably have a run for the rest of this year after that. But my kind of visibility out beyond that gets a little fuzzy. Like when do we have a real correction here? What does that look like? And that, what's happening with the Trump administration, the tariffs, like, is it on? Is it off? Is it like nobody understands what's happening? I mean, that's putting more uncertainty and volatility into the market. You have bonds going crazy. We're definitely into a period of stagflation here. So
I find it interesting because the markets are very fragile, right? We saw that in April with the
yeah,
tariffs, and we all know they are anyway because there's no risk. Moral hazard, it's there's no risk. If something happens, the
yep,
Fed will just bail us out. We're good. Look at COVID.
right,
It went down, markets went down 30% when the whole world wasn't working. Like, how does that
yep,
work? And it just boggles my mind to see like that's probably the worst thing that we've seen in the last 30 years, and yet it's not the worst performance.
right. Yeah,
So
the markets aren't natural right now.
yeah, I mean the tech bubble and Nasdaq went down 70%. In the housing bubble, like everything got destroyed. It was 60% across the board. And in COVID, it was down 30.
Right.
Like what's the worst thing that could happen? Just, it's what do they
Yeah.
call it? Tina, there is no other alternative, just all in.
Right. Well, that's kind of what's happening, but that's why now you're starting to see the decoupling with gold. I mean, I think now the bigger players are saying, yeah, that's not happening anymore. So, so what do we do?
Yeah, I find that to be interesting. I mean, we've been in gold for a while and crypto. It's hard to be in equities when these other things are clearly undervalued.
Yeah.
I wonder. So people have been talking about for a while how Europe is undervalued and globally the U.S. has taken. I mean, U.S. has been on fire for 15 years and globally it's just been stagnant. This year, other assets globally are taking off, but I'm not sure I'm seeing a whole lot of growth across the board globally. So, what are you seeing internationally? I know we're all biased to our own country, but like, what are you seeing internationally? Like, what are people talking about? Where are people seeing opportunities?
Well, I'm seeing the same thing. I mean, the same talk. You should be more heavy in international global equities. I don't know. I mean, I think part of the issue is the uncertainty here, what's happening. So, are the European countries, investing at the rates they should be? Do they have access to the U.S. markets the way they did? They don't know. So I just don't think we're seeing that growth and investment the way you'd think. I mean, the military side, sure, getting the defense sector, they're going to be investing heavy, and that's kind of a automatic. But beyond that, I'm not sure. In Asia, you've got a lot of unknowns. I mean, Japan had done well, but what's happening now? You said same demographic issues. Um, yeah, it's interesting. I mean, I just don't see a good long-term path for equities globally. Um, is the problem?
Yeah, yeah, it's hard. It's hard to invest when things don't make sense. Especially if you're a value investor. The last 15 years have been rough.
Right, exactly. And that's, one of the things we saw, like you said, back in April when the tariff stuff came out. I mean, we have some very, very sophisticated traders, professionals that trade consistently that basically just took themselves off the board. And so I can't trade. I can't trade in this environment, don't understand it. Not going to happen. I mean, and they haven't come back really. You have some that dabble, but that's an interesting paradigm when that happens. And obviously you've got a lot of players that are more gamblers. They're fine. I'll trade in any environment. This volatility is great, but the serious ones really don't understand what's happening and how,
So
and how to apply a strategy to that.
yeah, so before we wrap it up, I want to talk about risk management. So you obviously work with a lot of sophisticated people. Risk management is one of the most important things. That's the first thing we look at when we look at investing. How can people manage risk in an environment like this where it's hard to navigate, even for the
Well, I mean, I think
professionals?
I mean, like always, you got to be position sizing the right way for your account. That's absolutely critical. And again, understanding what it is you're trading in your strategy, knowing when you're right and when you're wrong. But if you've got a system, you understand what you're doing. It's kind of easier said than done to follow that. Discretionary traders get themselves in trouble overextending and not keeping control and having the understanding whether you have stops in the market or not, understanding where it is you're taking yourself out of that position that you were wrong in your thesis. It's critical. And now things are moving so fast, and I think the volatility is going to pick up from here. Got to be very careful.
Yeah. Yeah, everyone's worried about September, but to me, it feels like, well, we'll probably be up for the month just because
Yeah,
everyone's worried
most
about
likely. Yes.
it.
Everything's going
Never,
against what you'd think right
yeah,
now.
the market always seems to do the least logical thing that you're thinking. You think that everyone thinks it's going to happen. Nope, it's going to crash. And you're
No.
like, nope,
Right.
it's going to go up.
Right. And this last couple of years is just buying the dip mentality has been pretty amazing. I mean, just every single dip, like boom, like right back up. Uh,
How much control do you think retail actually has? We saw that with the meme trades, we saw that with against the hedge funds, and clearly they were in control, but that was a little bit different. But how much control do you think retail actually has anymore?
well, I think they have some. I mean, it's come back with another handful of stocks over the last 3, 4 months. You saw some movement in some of those as they tried. I forget there was another one that they were really hyper involved in. Names escaping me, but I think in general, when the social groups can get together and really coordinate, they have capability. They've proven it. It's just they don't have consolidated leadership to be able to drive,
Right.
consistently drive the right message and what they're trying to achieve. So I think having some organization, it's great to have, retail advocates and, participation in what's happening. It's just not as coordinated as I think it should be
Yeah.
or could be.
Yeah. I mean, the base of the meme people, they were just basically a hedge fund. They were
Yeah,
just a
exactly.
group
Take them
together.
out. They're the bad guys. We're the good guys. Just take me. It's like, okay,
But that's what
fine.
hedge funds do. They compete against
Yeah,
each other. They're
exactly.
constantly cutting each other's throats. It's just the same thing. They just didn't
Yeah,
like it. The hedge funds
exactly.
didn't like it when the retail guys took them to the cleaners.
Yeah, that's right. Yeah, yeah. They finally have a voice. We'll see. I mean, it's interesting to see how this evolves. I just, right now, I think it's just more a little mass mob mentality. But
Yeah. Yeah, agreed. Well, we're going to wrap it up in the interest of time. I appreciate you coming on the show, John. What are some final thoughts you can leave our listeners with, and where can people find more about you?
well, TradeStation.com. They can learn about the company. LinkedIn. I'm active out there, sharing a lot of ideas on what we're doing within the company, and I share a lot of what's going on with the global macro picture and things that we're doing. So that's where you can find me.
Awesome. Well, thanks again for coming on, John. Appreciate you taking time out of your day, and we'll have you back on in the future.
Thank you very much.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. You mean like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider or in the room, as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room. All right, that was a great interview with John. Appreciate him coming on the show. Now we're into the panel portion of the show where we have our very own Barb Freeberg. Hey, Barb.
Hello, everybody. Happy to be here.
Great. Glad to have you. And we also have our very own Diana Perkins. Hey, Diana.
Hi, Kirk. Thanks for having me on.
Yeah, yeah, this is gonna be a good this will be a good show. So, Barb, what were some of your takeaways from the interview?
Wow. Well, I thought it was really fascinating. Personally, I'm not a trader, so it's not within my investing sphere. I'm more of a buy and hold type of investor. But I think for people that are traders, it was very educational and he was very even handed. I also liked him talking about the history of how Robinhood and some of these newer platforms have brought a new generation into trading. So I thought it was very useful, particularly for people that are interested in trading. But I also want to make sure we hit on the pros and the cons of being an active trader because it is not all roses.
Yeah, that's good. Well, we have our very own trading expert here, Diana Perkins. So, Diana, what are some of your takeaways from the interview?
Yeah, so first of all, love the guest, love the conversation. First and foremost, the explosion of retail trading and how accessible the financial markets are right now to the retail trader. It's incredible. $0 account minimums, $0 commissions on most online brokerages for ETFs and stock trades. Obviously, online brokerage platforms in and of themselves. So the financial markets are more accessible to everyday people more than ever, which is has its pros and cons. Of course, as a trader myself, I see the pros, but I also see a responsibility around that, especially when you overlay one of the that John spoke about, which is a move or a shift into derivatives trading. So especially futures options, event contracts when we talk, zero DTE, I have some traders who are really into that as well. And so when you think about some of the complexity around derivatives trading, it's really exciting. There's a lot of opportunity there, but it also requires a certain amount of education and discipline, and the real edge becomes risk management. So that was the main takeaway for me. Of course, AI and how we're leveraging AI tools, and in this case, creating different connectivity through AI and trading data. It's fascinating, but again, there it also brings up ideas around privacy and security and things like that to temper the excitement of the accessibility.
Yeah, and I think you raised a bunch of points there. So, Barb, you had kind of alluded to this, but as there's more accessibility to traders to do things like options and just trading strategies, um, should there be this kind of accessibility? I mean, are people equipped to handle this kind of responsibility? What do you think?
That's a good question. Well, think of it this way. How probable is it that you can stock trade your way into huge sums of money within a short period of time? Because I think one of the scary parts about active trading is there is an illusion that it's a quick way to get rich. And so you're going to have a cadre of people there that think, okay, I'll just become a day trader in a short period of time. I'm going to become rich and then I can retire. Well, some people do that. That is true. But the large majority are more likely to lose their shirts than they are to become rich in a short period of time. And so I'm always very cautious about any strategies that have the whiff of making a lot of money in a short period of time. Whereas the long term investor, be it somebody who's putting $500 in their 401k every month, investing in a diversified portfolio of stocks and bonds over time, yeah, over 40 years, you're going to become a millionaire or have $2 million. That's pretty tried and true. But a lot of people don't want to go that route and they think, oh, I can do it much quicker and I can then fast track my life to a life of luxury and retirement when I'm in my 30s. And I think that is dangerous and unlikely for the majority of people who are trading investment.
Okay, that's fair. What about you, Diana? I know you're a big proponent of this. You want to empower people to take control of their lives. I mean, should people have access to this kind of thing? Like, what are the pros and cons of that?
hmm Yeah, I think so. I agree with the illusion and the get rich quick. And I think that, for those who, I mean, 95% of day traders lose money, and there's a reason for that. There's, emotional reaction. And if you don't understand what you're doing, there is a lot of risk there. That said, one of the things that John talked about, and I trade in a similar way, it's swing trading. So you're buying and holding for maybe a few days, for a few weeks, and essentially you're using technical analysis or charting to capitalize on price swings. And there's absolutely a responsible way that you can do that through risk management, which you can define, defined risk options where the risk is completely capped to the amount of the contract times the number of contracts. I mean, even if you have a stop loss on a share of stock, the price could gap down. So it's really you have defined risk options. There's ways that you can manage your downside risk. Um, and the key really is just being knowledgeable. I mean, you'll hear me say this over again, no matter if you're a long-term investor, a midterm swing trader or a day trader, understanding what you're doing or what you're investing in or what you're trading it's equally important across the board. Where it becomes risky is when you don't understand what you're invested in, whether it's buy and hold or what you're trading in, and the tools and capabilities that you're using to enter the markets. If you don't understand that, of course it's risky. If you stood in front of a two-lane highway blindfolded, and walked forward, I see that as the equivalent of, trading a naked, call or put option in the market and not understanding how the pricing works. So yes, I believe it should be accessible to the masses. I don't, see anything wrong with that. But I also feel that the education around that becomes even more important. And you'll see with many of these online brokerages like TradeStation, Schwab, Fidelity, E-Trade, they're doing more and more around investor education. So I think it's each individual trader or investor's responsibility to do that diligence, educate themselves before they go in because it does involve risk and understand that it's that discipline and how you manage that risk that will keep you in long term. So probably not everyone approaches the markets that way. But if you do, that's where you can capitalize on those short-term swings and stay in longer term.
I want to ask you separately, Diana, because I know you trade. I've noticed that I know you don't use TradeStation, but I noticed that a lot of traders do. And so I've always wondered, like, what is it about them that makes the platform so appealing? Because I've looked at it briefly and I was like, it's just another platform. Like, doesn't I might be missing something, but I was always wondering, like, all the traders I know, they're like, oh yeah, we use TradeStation. Like, why? Like, what's it about? Like, have you looked in it? Like, what's the appeal?
Right. So you're right. I don't personally trade on TradeStation, but so some of the appeals are the asset classes that they offer. So futures trading, crypto trading. Not all platforms offer those asset classes. That's one. Two, their backtesting capabilities, they're much more sophisticated. I mean, personally, I've done a lot with Thinkorswim and other platforms, but it's really more manual with those back testing capabilities. But when you get to platforms like TradeStation, IBKR, Interactive Brokers that I used when I was trading professionally, when you get into those, there's more automation capabilities API integrations like John talked about. And so if you are what I'll call a more sophisticated trader, an active trader, you want to program rules that say, hey, when the 20-day simple moving averages crosses over and above the 50-day, we're going to buy. When the RSI is above 70, we're going to sell. You can do that and you can back test that and automate that and even extrapolate like to commissions and the fees and what that would look like. So that's very powerful. So that's one of the reasons when you look at something like an E-Trade, it's much more simple interface. And so it's almost like a tier set of brokerages that specialize in different areas like Tasty Trade for options. But really the asset classes and the capabilities, those are the two biggest differentiators, in my opinion, across platforms.
Okay, cool. No, I was always curious. I mean, it's obviously nice to hear from John, but I like to hear from people who are in the trenches too. Um, one of the challenges now is with all these platforms. I mean, Interactive Brokers always used to be the cheapest, and they would advertise it was like everyone's $10 and theirs was like 2 cents. It was like it was amazing, and it was like, how are these guys making money? But now everybody's free, so like, um, Barb, um, when you're hearing all this, right, and how should people be thinking about as a concept, right? And I know there's a lot of passive investors out there, and passive investors have seemed to have eaten the world, where everybody just sticks stuff in an index and they forget it. Um, and I don't know if that's making the world a better or worse place, but certainly it causes people to stop thinking. So, is that really the best path, or should people be more active in their involvement and understanding of investing?
Let's start with the research because that's what drove me to a passive investing style. I got my MBA, I don't know, 15 years ago or whatever. I had already been a professional investor at that time. And I was pretty much focused on buying and selling stocks, studying their valuations, looking for undervalued stocks to buy, waiting for their value to catch up with what I had assessed was their market value, and then selling for a profit. So that was my strategy. And it was working fine for me. So, first day of my finance class, the teacher asked who thinks they can beat the market. And of course, my hand went up. Why wouldn't it? And she proceeded to discuss the research. And I have followed this research subsequently for decades. And it turns out only about 15% of active fund managers, active traders are able to beat the markets annually. And of that group, very few of them continue over more than 1 year. So, look, that doesn't discuss the people who don't put their returns out publicly because we don't know about them. And there are obviously active investors who are very successful. We don't know what they do. But in general, that data is telling you that beating the returns of the S&P 500, the unmanaged indexes is very, very difficult. Maybe for 1 year you can do it, but for multiple years, it is very, very difficult. And that is the reason why there are so many passive investors. It's very cheap to invest in an ETF that follows either the S&P 500, the total US market, total world market, Europe, whatever. And over time, a diversified portfolio of stock index funds has done, close to 10% a year over decades and decades, actually over 10% a year for decades. Now, that's really, really tough to beat. And that is why passive investing has gained so many followers. Does that mean there's no room for active investors? No. And does that mean that there is no room for people to beat the markets? No. And maybe people in private are beating the markets and their results are never captured. But what I recommend to people, because I can see the allure, there was so much excitement in researching stocks, picking at picking them, listening to the annual calls, making these decisions. But today, you are competing with algorithms, with high frequency traders. And so for individuals to think that regularly they're going to beat the market, I think that's difficult. And I suggest to people who want to trade, because I loved what you said, Diana, about being a learning curve for all sorts of investing. There is a learning curve. And it's really important to become educated. There's a greater learning curve and more information to become a successful trader. I suggest people, have 75, 80, 90% of your portfolio in a diversified index fund portfolio, attuned to your risk tolerance. If you're young, if you've got many years to grow your wealth, 80%, 90%, whatever. Otherwise, if you're more conservative, a lower percent, and then have some bonds in there as well. And then use the rest of your assets to dip your toes into trading. See how you do. See if you have the temperament, the time, and the interest to devote to learning the skills that you need.
Yeah, I think that's wise. I think it's a good idea. What are your thoughts, Diana?
Mhm. Yeah, so first I would challenge the notion that most people are passive investors because of the regular returns from like the index of the stock market, like the S&P or NASDAQ Dow, pick one, over time. In my experience, the reason is more so just either intimidation or lack of financial knowledge or feeling like the stock markets are a black hole. And there are so many common misbeliefs around the stock markets. Like you need millions of dollars to enter, right? You can start trading with $5. I have someone in my building that has a $7 investment in Nike on his Cash App. Like you don't need millions to start. We talked about the platforms being more accessible than ever to so many people and the educational tools out there. So first and foremost, I don't think it's really the returns that are appealing. Maybe the stability with some, but I think it's just lack of understanding of the stock markets and understanding that it's for everyone and understanding even just where to start, where to place a trade, and what to invest in. I don't believe the learning curve is relatively higher as well. I've taught students, how to put a watch list together in 20 minutes through what's called a top-down analysis. And it's very specific, it's very analytical. You know to the dollar how much risk you're taking going in on your position, your maximum drawdown amount. And you can absolutely use things like derivatives. I used to be an options trader to as leverage, right? So instead of investing tens of thousands of dollars in, 100 shares of Microsoft, you can control that same number of shares for, for pennies on the dollar, for maybe, say $1,500, and control the same number of shares that might be a $20,000, $30,000 investment. So that capital tie up. So with more leverage, you have less of that capital tied up, and you can make those types of returns with defined risk strategies. So when we think about the markets, I think it's just a lack of understanding how they work or feeling intimidated, not knowing where to start. And that all changes through education and understanding it is accessible. There are, low account minimums, and this is something that everyone can do. At a minimum, just educating yourself in this field so you can speak to it intelligibly and feel more comfortable about money.
Yeah, no, I think that's wise. So, I want to ask one more question here. I mean, what, Barb, in your opinion, what are the kinds of people that should be considering this we talk a lot about investor psychology on the show. Like, what are the kinds of people that should be considering this, and how can people determine it's the right fit for them? Because some people it's clearly not. I could talk to somebody for 5 minutes and know like this isn't for you. Because clearly they're going to self-destruct, or I think the people who probably don't think they are equipped for it are probably the best suited, right? And but anyway. So what are your thoughts, Barb?
Well, first you have to have the time because investing regularly, dollar cost averaging into a diversified portfolio of index funds, once you set your asset allocation, you're done. You don't have to do anything. You don't have to look at it. And if you're the type of person that really doesn't have a lot of interest in investing in finance in the investment markets, you're not going to want to do this. On the other hand, if you are someone that has, I don't know how much time, Diana, you would probably be better suited to answer this. I would say half hour a day, maybe, would be a minimum, and has the interest to follow the markets, to keep on top of the different trades that you're making, to make these decisions. And it's fascinating to you, and you want to learn this skill, then you can be suited to that. You can learn these skills, you can practice it. But I disagree with Diana in that this is not something for all of your capital. It is not, it is unlikely that most people are going to be able to surpass the returns given the research, the data, Vanguard's data. So many of the big fund companies, IFA data, so many have done so many studies that passive index fund investing beats active investing, that you can't turn your head to that. So I think someone who has the interest and has the time and is going to be able, I think once you learn the skills that you need to be more of an active trader, then it will take you less time. And those are the people that should try it. There's no one certain, oh, it's good for you and it's not good for you. I think it's driven by your interest and the amount of time that you have.
Yeah, I think that's good insight. Diana, what about you? What are your thoughts?
No, I would say on the topic of time, that's probably, other than not having enough capital, that's probably number two. And what a lot of people say, like, hey, I don't have the time to actively manage a trading account. So I like that you brought that up, Barb. To that, I would say, because when I started trading, I was working full time in technology. It was a very demanding job, and I used passive trade management. So there are advanced order types like bracket orders, where you have your entry price, your target price, your stop loss price, and it triggers you in. You either get out for a small gain or get out automatically for a small loss. So
But
really,
Diana, let me ask you this.
sure.
I understand that. So you're not going to make mistakes. But the startup to that is you have to structure the trade. You have to do the research to figure out that trade that you're going to make. And that takes some time, right?
Yes, it does. So depending on your frequency, so my most active traders, it might be weekly. So like on a Sunday afternoon, they'll spend 1 to 2 hours tops doing that analysis, putting their watch list together. And then throughout the week, they'll monitor that watch list for anything that's triggering. Now you can automate it through these order entry types. So it could be, 1 hour a week. If you're trading on a monthly basis, maybe longer term options or buy and hold stops for, a couple months or a couple weeks, then you do that analysis. Maybe it's every 2 weeks or every month, but it's actually pretty quick once you get into the rhythm, depending on what your strategy is. And everyone has a different strategy, so some might be more complex, but you can automate a lot of that if you need to. And really, it's just keeping a pulse in the markets. So check market watch in the morning, check the futures markets, see where it's going, making sure you're balanced just like you would as a portfolio manager. And then through the week, just monitor your positions, make sure you understand your maximum drawdown amount, right? And but it's really much less of a time commitment than people think. When I was trading full time, I mean, it was maybe like 10, 15 hours a week. And I was really stretching it. I had a very complex plan. But even then, it's really not that huge of a commitment. Now, day trading, that is a different story. I've tried that before. And that's where I think your statistics, Barb, are spot on, maybe even higher, because that's where a lot of emotions get involved. And the best traders I've worked with, the most successful, they treat trading like a business. They have their trading plan strategy, it's almost like a business plan, and they have the discipline to follow it. And that's one of the hardest things to do because of, right, that excitement, right? And I always say you've made it in trading when it's completely mechanical, when you're playing the probabilities, your defined risk on every position overall on your portfolio, and you're overlaying essentially a structured plan. You mentioned, Barb, competing with the algo traders, right? I know we talked a lot about AI, or Kirk talked a lot about AI with John in this interview, and trading. Now, algorithmic trading has been around for a long time, but when you think about how quickly and all the variables, market variables that are involved that move the market from volatility, economic reports, what's happening internationally, earnings season, right? Last week we had five out of the, Mag 7 report, and that's going to move, the Nasdaq quite a bit. So when you take all that into account, there's no one, coding silver bullet that's going to be able to keep up, at least not as of today. So the idea is you capitalize on those price swings. I mean, using derivatives, you have that leverage with defined risk. You can beat the market, but you have to keep your emotions in check. And that's the downfall for so many traders, especially day traders that are watching every tick up and down.
Yeah, no, those are great insights. So Barb, final thoughts from you as we wrap it up here.
Final thoughts are getting back to education, education, education. And I feel like on every podcast that we discuss, I am like a freaking broken record because don't do stuff you don't understand, period. You're going to have to learn about investing, about trading, about whatever you want to do. I'll give a shout out. I have not taken Diana's course, but I have a lot of respect for her. And I would say look into it because she's very smart. She's got a lot of experience, and she is somebody that if I were going this route, I'd probably check her out. Again, there are a lot of free courses out there as well. You can go to the Chicago Board of Options. Nearly every single trading platform has a trading course or two. So before you dive in with your own real money or, more than a couple hundred, a couple $1,000s, I would suggest take some of these courses, dip your feet in and see if this is for you. And then Kirk, back to your other question, then you will self-select and decide, oh, this is for me. I love it. It's fascinating. Here's how much money I can devote now to this endeavor. So I am Barbara Friedberg. You can find me on YouTube and at Barbara Friedberg Personal Finance.
Great. Thanks for coming on the show, Barb. And Diana, final thoughts from you.
Yeah, I mean, I'll go back to my opening remarks, which is, the financial markets, they're more accessible now than ever. It's very exciting, but there is a responsibility there. And whether you're, a systematic, trader investor or discretionary, the edge lies in the discipline and trade management, what I call kind of that unsexy areas of trading, but that's what will keep you in there. And then I absolutely want to mirror Barb's sentiment around education. Educate yourself. When it comes to finance, I always say ask as many questions as you need to until it's black and white. There's so many amazing resources out there. If you're really serious, we can work together in a coaching capacity. But whatever it is, just make sure you know what you're doing. Have fun with it. Be disciplined. Don't let your emotions take control. I'm Diana Perkins. I'm the founder of Trading with Diana, where I help professionals invest in the stock markets with confidence. You can find me on my website at tradingwithdiana.com.
Awesome. Well, thank you for coming on, Diana, and thank you both. That's the show for this week. Thank you again for joining us in Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.